Hi, you're watching Investor Insights. I'm Vic, and just a quick update for you folks. The non-farms payrolls came out on Friday over in the States, and it was yet another dismal print. You're looking at a number of 113,000, where consensus estimates was going to be closer to 185,000. And at last night's Fed meeting, we had Janet Yellen coming out and saying that the Federal Reserve is on track to pretty much fully taper off its asset purchases in the near future. Now, obviously, she has a very different breakfast to what all of us eat, because seriously, you've got data which is deteriorating, and the whole economic recovery has been an illusion in the first place, because all this money that's been printed and all these asset purchases have done nothing to help the economy recover or restructure, and it has more or less simply reflated a housing bubble that was never meant to happen in the first place, as well as causing more of the same dramas that started the GFC in the first place, and that is living beyond your means as a consumer. So America is now embarking on even more consumer debt finance consumption. In this case, the consumer is actually the government, and there's no end in sight. So by inflating asset prices, whether it be stock, bond, or real estate prices, it gives people the wealth effect. So people feel good about themselves and they go out and they spend. The problem is, only people who own these assets feel rich. Those who are living on Main Street don't feel it. So all surveys that are taken of people that are your normal Joe Blows, they actually feel that the country is almost in a depression. And that's actually correct, because all the GDP numbers and all those conjured up statistics essentially are just inflation. So you've got GDP of what, 2, 3, whatever percentage that they say. It's actually closer to 5% inflation, which is running the show. Now, there isn't really anything that the government can do anymore, and there's nothing that the Federal Reserve can do except lie about tapering, because as this data worsens, the Federal Reserve has no option but to do an about face and to retract these decrease in asset purchases, and in fact increase their asset purchases. The reason being is that the taper was supposed to have begun in December and more tapering in January, whatever. But the thing is, you've got a lot of idiot commentators out there who are saying that the tapering is taking effect and that the bite is now strongly taken over the economy. Now, to be quite honest about these things, whenever you have minor monetary policy changes, such as tapering of 10 billion out of 85 billion, the follow-on effects won't be felt for months. So the tapering hasn't even taken bite, and it's just the suggestions. So with all this expansion of the balance sheet over the past few years, and with all these continual asset purchases, the economic picture is worsening. The only bright spot of the government's contrived data is actually the unemployment rate, and they're saying that it's ticking down every month to yet another 5.5-year low. Well, unfortunately, that is just all subjective views. I can tell you one thing: when you don't take into account the people that have stopped looking for work, that unemployment rate means nothing. So essentially, it can get to an example where you can have an unemployment rate of 2%, which is incredibly low. But in fact, you only have a workforce of 100 odd people, and 2 people are unemployed. But the other 150 odd million people who have given up looking for work would not count towards that unemployment rate. So if you were to look at a real unemployment rate, you'd be looking at 99.9 repeater. But if you're looking at the stated unemployment, it would be closer to only 2%. So you guys be the judge. Now, I'm taking some time out to shoot a real estate series. This is based on the huge amount of emails I get demanding one. And I thought that instead of giving one long lecture, I'd split it up into 10 equal little bits. And it's just a little bit easier digested that way. And in that series, everything's covered, from the capital cities to renting versus buying, the effects on the banks, the effects of the RBA, the effects of inflation. All these things will be discussed, and as I'm just about 3/4 of the way through, hopefully over the next couple of weeks, you guys can enjoy all of that. Now, in the meantime, also keep in mind how the markets are reacting to the unemployment numbers. As the data worsens, the stock markets are exploding upwards again. The market doesn't believe that the Federal Reserve is going to taper. And in fact, a lot of the market players are betting on exactly what I'm saying, increases in asset purchases, so they're going all in on purchasing all these worthless stocks. So, Janet Yellen must be one happy Fed chairman, because bond rates have just dropped. And that in turn leads to lower mortgage rates for people, so it stimulates consumer spending, lower mortgage repayments, but more importantly, it lowers the government's debt repayment burden because rates are just lower. And how long this is going to go for, who knows, but it's just something to keep an eye out on.